Welcome to the last trading day of this week. It's Thursday, March 28th. The market is closed tomorrow. So, what do we have? We have several levels, including a dash line at the top, which we'll talk about this afternoon after the market closes. And they have pretty much remained on the flat line from where they closed yesterday, maybe slightly below 523. They're 522.85 currently. You'll notice it's a little bit after 8 o'clock. I have an obligation at 8:30. So this is before, what do we have? There's some announcements and some data coming out. GDP at 8:30. It's probably going to jolt the market a little bit, but I won't be here to look at that. And I like to look at some of this pre-market action before I post this part of the video and put out the numbers. But today I can't do that. And I'm not sure I'll actually be in any trades this morning, much less recording them. We'll see if I'm available by 9:45, 10 o'clock or so. So I think it was John Maynard Keynes, the economist, who said that the market can stay irrational longer than you can stay solvent. Well, first of all, that doesn't affect us too much because I'm not going to be in active trades riding a long trend like this on the wrong side of it, because what I do is intraday trades and I'm out of the market before it closes. But I just mention this because the market is acting slightly irrational in the sense that it just keeps grinding higher. So that line in the sand of 518.50 is below every level we have on the board today. Last day of the week, last day of the month. So anything can happen. Not likely. Well, who knows? I mean, the distance from current price to this zone up here is pretty far. It's also pretty far down to 518.50. And if they're just going to continue to grind higher, then we will just take what the market gives us. They could fall lower. Anything can happen. And as a result of that, like the last few days, I will be treating every single one of these zones, if I have a chance to trade, very cautiously. Just maybe one or two contracts at each level, because I don't want to get caught in some type of position on the wrong side of the levels if the market decides to do some type of sharp move. And I keep thinking a sharp move as in downward pressure. But anything can happen. Once again, the market can stay irrational longer than anyone can stay solvent. So we'll see you after the market closes to talk about the activity in the spiders and any trades that may have been taken at these levels. See you then. It's after 9 p.m. The market's closed, obviously, and I was able to get back to my computer right before 9:45 and recorded two trades. The first one was right after our window of opportunity opened, and that was a long trade here, and they hugged this level all day. Pretty important. Obvious now, and they were nice enough to come up to this next level, busted above the former all-time high of 524.11, I think, and touched our level, pulled away. I trailed this one down. I'll explain the thought process and a few other things that I was made aware of at this time, why I knew I could trail this down farther. And so into the week, into the month, into the quarter, and they closed pretty strong, way above our line of the sand. So the band plays on. For the time being, I guess. Next week should be interesting. I know I said that about this week and probably the week before, because we are 2 or 3 weeks now into the third week of them kind of being overextended. But then what's overextended? Obviously, the market can go a lot farther than you think it can, as we discussed this morning. So let's take a look at the the trades as they happened in real time. So this is paused here. I'm just going to, before I start playing, just notice the clock in the lower right hand corner, because as soon as 9:45 clock hit 9:45, I bought at the market, because they were right at 523.17. Did not adjust the level, didn't need to. That's where they were, and pretty sure they're going to go higher, at least for a little scalp trade, and pretty nice and clean, not out of the money. They shot up, and once they handed over the base hit of my 4 points with my two contracts, they just turned back around, went back to the baseline, or went to the entry point again. So had what I needed, and nothing really happened for quite a while. And I think it was around 10, 15, 16. I just jump ahead to the other trade. I just kind of cut the two recordings. So here, now it's approaching 3:30 p.m. You know, I don't like to take trades unless certain things present themselves after 3:30 p.m. And it was around 3:26, 3:27, like 3 minutes to spare, and started getting some clues that this would be a good place to go short. And really, I would have liked them just to fall completely out of bed toward the last 20, 30 minutes of the day, and I would just ride a nice short trade down. But what happened is once they went up there, and I sold two right at 524.58. There it is. I'm in the trade. Is almost as soon as that trade was that trade was entered, I went ahead and put my profit target more like 7 points, 7.5 points instead of usual 4. So my thought process here was I'd seen something that was a pretty big tell that they're going to go lower. So I thought, well, if I can grab 7 points, I'll take one. You see me change this to 1 and then trail the other one at about 10 points. That's enough leash. It's above the entry point here. Because if they were to fall toward the end and just sort of kill them here at the close, then I could trail quite a bit and let's see what I can get. Plus, I only had just 2 contracts. And once I got the 1 contract at 7.5 points, then that's almost the equivalent of the 2 contracts at 4 points. If you're following me, then I'd be okay for them to come all the way back up and stop me out because, I already made what I was looking for in the first place. But as it turned out, I did better than that. So you'll see them come down. They'll satisfy the 1. I bought back 1 of the short 2 that I were short, and they continue to go lower as I suspected they would. So at this point, you got to think, well, the market closes at 4 o'clock for the equities market, 4:15 for the futures, but I don't like to be in a trade after 4 o'clock. So I'm kind of looking down here. And by the way, I guess I didn't mention this. The reason I got out at that point, that was just a place where I had a feel they were going to bounce a little bit. They did, but I had a trailer far enough up that I was pretty safe in the money here. At this point, think of what can happen. Several options. One, they can come all the way back up, stop me out, either lose a little bit or in this case, make a tick or so on my 1. And I'm okay with that. I'll just let that happen. But I was hoping they'd come all the way down before 4 o'clock, and I would just close right here because that would be another bounce area. They could fall, but I just want to be out by 4 o'clock. Yes, I'm aware I could hold it till 4:15, but like I said, it's just I feel good to be out by 4 o'clock. So look at the clock, 3:57 and counting. So I thought, well, at 3:59 and 50 seconds, I'll just close out wherever it's at if they're still falling at that point. So I slowed this recording down so it's not as fast. So you'll see 3:59, 50 cents or 50 seconds come up there. It disappeared because I just closed it at the market, which was good for, I forget exactly how many. I know it was equivalent of $450 or so for that 1 point. So not too bad. Basically another, 4.5 or so points on that trailer. I guess I can stop this now. That's just the aftermarket or the post market. Nothing really happened. We'll just go back and look at the full day for one more time. So back on this chart, I just want to point out that while I didn't adjust the 523.17, didn't need to. They shot right off from that level for a long trade. When I did adjust this one down 5 cents, that was what was needed to pull this trade in because it was a penny or two off at the calculated level. And that's one of the reasons I do this. It just works more often than not to pull trades in. So anyway, pretty clean trades today. I was going to mention this dash line. I said I would this morning. I guess I don't want to get too in the weeds here. It's not a calculated level, but since it's so close to one of the numbers that came out of the calculator this morning, that would be a good zone if they went up that high. I mean, it was kind of a stretch, but they're all important for their own reasons. I guess I'm not going to explain too much of where that came from, but it was kind of just an interesting area. I know I'm kind of like not providing a lot of clues here, but there are things like, for example, what I knew here, just like back on Friday the 15th, the Ides of March, and I trailed that down for 20 something points, 22 points, I think it was. There was the same thing happened. I'm able to get a clue on something that tells me, I guess the only hint I'm going to drop here is that it's a pretty good tell that professionals are starting to flood the market and start to sell. And when that happens, then you can go along for the ride a little farther. So I will trail those for more points. That's all I'll say about that. Now, I do teach this in this course that I'm developing. It's all revealed. It's not rocket science, but probably not well known either of how you can look for this information. Anyway, so you saw that trail. And so the other thing I'll talk about is on the tracking log, where I want to point out that I'm on the wrong one here. So I've made 2. So this is my regular tracking log, and I'm just calling 2 base hits because that's what they were according to the rules. But the rules do allow for some subjectivity. So in other words, you can make some decisions. I made a decision on that last trade to trail. And so I got more than with my 2 trades than just, 8 points or $800 with 2 contracts. So what I did is I put that over in this. I just made a copy of this spreadsheet, and what I'm going to do going forward is if I have trades like this, because yes, they are subjective. You may not have gotten 10 points on that first half of the position and trailed it that much as I did, or more or less. Maybe you did more. You could have done more based on some of these other indications that I teach in this course. But this is what I made, so I'm just showing you. This is the $1,260 something before commissions. So this is 1250 essentially. So I got the base hit, and 4.5 points on that trailer on just one contract. So I'm going to do this and just keep track of them this way because it does affect the daily averages, and it's more accurate. And also included in this is the 20. Here we go, March 15. The base plus an 18-point trailer on the remaining part. So 30 points is what I got on this. This is what I made for the day. I didn't take the last base hit. So this is more accurate of what the trades look like for me, and this other regular SPY tracker spreadsheet that I've been showing since I started this is what every level would achieve if you traded each level by the rules and pulled base hits from them. So anyway, hope you found that interesting. And of course, the market's closed tomorrow, so we'll be back on Monday, and it'll be another interesting week. There's a lot of trades around the corner. Have a great weekend. Thanks for watching.